The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, boys and girls, welcome to the technical part of the, I guess this is my show, I don't know what they call it. Anyway, we're going to take a trip down memory lane today. I've got a couple of charts here that I think are extremely interesting. They were interesting to me. I hope they'll be interesting to you. The first one that I posted into Tiger TV is a chart of the Dow Jones Industrial Average on a monthly chart going back to 1999. Basically, it shows a 1, 2, 3, 4, 5 expanding triangle pattern, also known as reverse point wave. This is one of the patterns out of Gartley's book. It happens to be the most accurate of all the patterns. In other words, it has a higher probability of working than any of the other patterns that he has. They're all positive. They're usually in the neighborhood of 60% or up, but this one is closer to 80%. Of course, when it doesn't work that other 20%, it can be a real parabolic move to the upside. But this is what we're looking at here in the Dow Jones. We're seeing the same thing in the NASDAQ. We're seeing the same thing in the DAX and the FTSE. The Nikkei, of course, is far weaker. The Chinese market is far weaker. But this is the long-term chart. I started out with this one because it has a 7-year peak-to-peak. In other words, we peaked in 2000, we peaked in 2007, which was 7 years, and now we're 7 years into this one. But frankly, timing is the most difficult part of this, so I don't really watch that too much. I watch the patterns and the ratio. That's the main thing, that I'm following. We've had pretty much a parabolic move in the transportation index to the upside on this last leg. The Dow Jones Utilities has not made a new high yet, but it's still early. It could certainly do that, and at any time it will happen. The one thing that after a great deal of thought, the one thing that I'm absolutely sure of, we're going to see something that we haven't seen in a very long time, and it starts with a C and it ends with an H. And the $64 question is when. It's not going to start from the top up here. It will start mid-cycle. It will look like the market is going to hold. There'll be probably some really good news of some kind, and you're going to see like vacuums in the market. When you start to see these vacuums, and I'm talking, let's take a stock like Bank of America. Well, no, let's take a real stock. Let's take a stock like Goldman Sachs trading in the 160s. The stock could be trading at 165, and the next trade could be 158 or 148, something like that. I mean, when you start to see stuff like that, then you know that there's something wrong. Usually, this will show up in the currency markets mainly. That's why. Why am I saying this? I've been looking for a top since December. It had a few of them in there, but none of them stayed for very long. The reason why I'm saying that is this market's gone up on thin air. We've had virtually no volume in the market. There's more people leaving the commodity markets in the S&P and the NASDAQ and the Dow Jones indices than there are entering the market. That's very bearish when open interest starts to turn down. So we remember that from what happened when gold was at $1932 and silver was at $49. So this is the type of move that we're seeing. This has been the biggest bull market that we've had, I think, forever. This is bigger than the one from 1929, I believe, because we started this bull market back in 1974. And that's the next thing that I wanted to do here is I wanted to go back and revisit. Last week I posted a chart that someone from the Den had sent me, and it was a very interesting chart, but because it went back to the late 1950s when I first started trading. I did my first trade in 1959. When I was a sophomore in college, and it was a freshman. I don't remember. Anyway, it was a stock called Elastic Stop Nut. It was one of those plastic ones, that they use for a nut, and it did really well. My uncle bought me 200 shares of that so that I could buy a car, and the stock, I think it went from 8 to 16. I had $1,600, and I was able to buy a 1960 Volkswagen Beetle, and put a lot of miles on that car through the years. But this chart takes us back to memory lane. What I'm showing you here on this chart is, if you'll look at this red arrows that you see where we are now, this was done in November when they were looking for a target of 1929 in the S&P, and of course we've got to 1950. 21 points. The difference between 1950 and 1929 on a monthly chart is insignificant, in my opinion. But the pattern's what's significant. You can see the distinct 5 waves that occur starting in the top of 2007 down to 03, up into 2007, and then down into 2008, and then up again. So that's pretty much what we're looking at. Question is posed to me is, what is the Fed money printing going to do to all this? Folks, I don't know, but nobody else does either. If this is an equity asset bubble, why hasn't it affected other things? Why hasn't it affected real estate? Real estate bounced some of it's bounced pretty good, but not very much at all. And it's only been the stock market. And frankly, folks, it hasn't gone up. I mean, it's gone up quite a bit, but there's been nobody in there buying it. There's not a lot of, volume is 60% of normal. And now we're coming into the, calm down, Larry, calm down. Now we're coming into the summer months. And that'll even be worse, in my opinion. And then they're also going to, be talking about high-frequency trading. They'll blame the crash, if we have one, on high-frequency trading. They certainly have to blame it on someone. In 1987, we had very few hedge funds. Most people didn't even know what a hedge fund was, and there were very few of those. Julian Robertson had one, and Tudor Jones had one. There were a few others, probably 50 or 60, maybe 100. Bruce Covenor had one. And but frankly, there were very few of those. But now we have ETFs out there that are, as Warren Buffett has said, the weapons of mass destruction. So anyway, I want you to focus on this chart here to see those 5 waves that occurred up at that top during that 14-year time frame. Now, the next chart that I want to do is before we do that, I want you to look at the far left, and you'll see the time frame between 1963 and also to October 1974. That was 11 years. You do that by you subtract 74 from 63, and you come up with 11. So what I've done is I've blown this up, and I want to show you what we're looking at here, because we are looking at the mirror image of a top being formed. The chart that you're seeing now on Tiger TV is from back in the 50s, about 1955. If you'll notice the first spike down in the 1960s, that's 1963. That's the assassination of President Kennedy. In November, the market bottomed shortly thereafter. And then the market rallied up into 1968, I think November. It came down into July of 1970, went up until July 28, 1972, and then that led to the crash of, it was called the October crash because the market had retraced 50% of its value from the high in 72 to the low in 74. So this is going to be, really interesting here. The same pattern that we had back then, 40 years ago, is occurring right now. When it's going to happen, folks, I don't know, but nobody else does either. I just know the signs to look for when it starts to happen is to try to, get on and, try to get a few trades in to the short side if you can, and maybe have a put option and something like that. During 1987, if you can imagine what that was like, that was the worst trading day. I mean, I had made a lot of money that day, but it was the worst trading day because I really didn't think I was going to get my money out of the market. And that was a tremendous fear. Regarding that, talking about getting money out of the market, we're going to have a chart. CNBC is going to do a special on their fear and greed segment that they have. I believe it's going to be on the 16th or the 17th of June. It's going to be on Peregrine Financial, PFG, Russell Wassendorf, my old friend from 40 years ago. And that was a very sad day for me for a lot of different reasons. I didn't see that coming. I had quite a few friends that had money there. And we lost, we got nothing back because it went to oblivion with EDF Man and the John Corzine, we did get some of our money back, but with PFG, it was bad. It really shocked me because I'd known him for since the 73, 74 era, and I really thought he was, a real straight shooter, but I sure had that one marked wrong. But there will be a thing on that, on Fear and Greed, on CNBC. I believe it's on the 16th or the 17th. I'll try to go in and find that and give you more information tomorrow when I do the commodity show. Talking about commodities, we're having corn and wheat getting hammered one more time. They're not involved in the asset allocation thing for the Fed, so nobody wants corn and wheat. They're not assets that anybody wants. I'm looking for corn to get down around that old low, around 440 a bushel level. It's not very far away, and so to see how it handles that new low, and if it doesn't accelerate into new low ground after it touches that low, then I'll look to be a buyer of that. But that's still down the road away. We're still about 10 cents away from the 786 in the wheat, so I have to wait on that also. So we'll be able to see what what will happen. So several people have asked me who I use for futures. I really don't like to go into that, folks, because I recommended some futures companies through the years. Most of them are okay, but I had 3 friends, 1 relative, 2 relatives, and 1 friend. It now works out that I have no relatives and no friends, but they had their money, not a lot of money, 30, 40 grand, but they had their money with PFG. They had it there for 5 or 6 years, doing well. Whenever they wanted a check, the check would come out, no problem at all. And then one day, bada bing, bada boom, it's all over. And I didn't see it coming. The CFT didn't see it coming. Nobody saw it coming. So this is why we got to be really careful. And it's a little scary about who's on the other side of this counterparty risk. That's why I wonder about these ETFs and stuff that they do. I still don't understand high-frequency trading. I mean, Mr. Lewis says that it's the end of the world, but if someone's got an edge, why not exploit it? That's what they're there for. I mean, if they're able to do that, that's more power to them, in my opinion. But, what do I know? So we'll see. Anyway, that's what I'm looking at in stocks. It's something really big. I think it's going to end badly when it finally does end. The $64 question is, when is it going to end, and how is it going to end? I think it will end badly. The things to look for is the vacuum that will occur. And believe me, with this low volume that we have, brother, it is coming. They might not come now, but it's coming. Don't shake your head. The man with that sickle is out there in the field, and he's swishing back and forth very slowly, so be careful. Don't shake your head. When it comes, it's going to be nasty. And if it doesn't come, guess what? There'll be somebody new here at TFNN with better information and better, trades for you. But on this one here, it's not if, it's when.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I posted into Tiger TV here today a chart going back to the time period of 1929. It shows from July through November. And into 1930, of course. But what I wanted to bring to your attention here is this area that is notated as a smaller peak. That's what I'm referring to. We're gonna, when the market comes down, it's going to break some support points, much like what Basil's been talking about on his show, and also Steve Rhodes. And then it'll have that quick counter trend rally. That's equivalent to this smaller peak that we're looking at here. In October of 1929. When that happens, that's when you want to prepare, because when you take out that other low that just occurred before that peak, that's when the real drop will come. It'll catch everyone not everyone. It'll catch some people by surprise, but that's what you should be waiting on. You don't have to come in here and try to pick a top. Wait for the market to break, sell that first retracement back, and then add to your positions when it takes out, that previous low, because that's what happened in 1987. The market bottomed on, it topped on August the 25th. It came down into September the 25th, rallied up into October the 2nd, and then it went down and down and down. From October 2nd to October 19th, the Dow gave up 33% of its value. That was the crash of 87, which turned out to be the greatest buying opportunity of all time. Folks, I will tell you this, the number of people that would have told you that was the greatest buying opportunity of all time, you could count on the hand of a person that was a double amputee. There was nobody. There were 1,647 issues on the New York Stock Exchange being traded. I believe there were only 13 issues up. in retrospect, if you'd have bought those 13 issues, you would have made a great deal of money. Stop and think just a minute. I mean, at the time, I was worried about getting my money out. My money was at Stotler at that time, which they ended up going bankrupt, but before they did, they paid us off. But the problem was you couldn't worry, but there was nobody on the other side of any trades. I mean, you just couldn't get filled. I mean, everybody was just absolutely scared to death. But there were 13 issues that day that were actually up on the day. Do you realize how bullish you have to be on a stock to buy it when the end of the world is, knocking on the door? And believe me, it was really scary. I mean, not many people were around to know how scary it was, and not much of this stuff ever scares me. The flash crash back in May of a couple of years ago, that was nothing. None of this stuff. Even the moves up, moves down, none of that was scary. 87, that was scary. Talk to somebody that went through it. You'll see. I mean, it was like nothing I ever saw and nothing I ever want to see again. It was a question of whether you were going to even stay afloat. That was the main thing. So that's the main thing, is what you want to look for is wait for the market to break some support. And believe me, I'm on here 3 days a week, and Basil is on and Steve is on. They're going to give you some ideas that, hey, if this is it, this is what I'm looking for. Whether it works or not, we don't know. But if it works, you're going to make a lot of money. You can buy some puts. Back in '87, you could have bought puts for $600 in the S&P that went off the board at 17,000. You only had to be in for 9 days. And so that's the kind of moves that you had during that time. And this is even going to be greater because the Dow was at 2,500 then. Now it's near 17,000. So there, when it comes, it's going to be a pretty significant kick in the pants. That's the way it looks like to me. So we'll have to wait and see if that's going to be the case or not. Someone asked me a question about the Treasury bonds. I think the bonds have made some type of a major top up here at this 138 level. There was a lot of numbers up there. Had a beautiful ABCD pattern that occurred, and I think that if I have enough time here before the break, I should come in and hold on one second here. When you try to get an Italian to walk and chew gum at the same time, it gets a little bit difficult. I'm not going to go into gold to the silver and the the corn and wheat until tomorrow, because I believe we have a crop report coming out tomorrow, either today or tomorrow. Rich Anderson's in Chicago, so I don't know exactly when it is, and I just been traveling, so I haven't been able to get back. I have to tell you a funny story. I saw my doctor yesterday afternoon because I've been traveling since my surgery, and he wrote me a prescription, and on the prescription it had NMT, and he handed it to me. And I said, MNT? I said, what's the dosage on it? And what is it? He said, no more travel. And so I am home for the count. I don't know when I'm going to travel again, but I can't travel till he tells me. Got the Dow down about 80, S&P down a bit, NASDAQ unchanged now.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we have a caller from Atlanta, Georgia. I just talked to Atlanta today. I had to wish someone a happy 80th birthday. Charles, are you there?
Yes, how are you, Larry?
Very good, sir. How are you? What can I do for you?
You made a very good call the other day. You said 12.18, and Priceman hit 12.18, bounced off it.
That happened just to be a 382 retreat. You must be talking about Priceline.com, right?
Right.
Yes, that's what it did. It was down 8 days in a row. We're having a little bit of a rally today along with the rest of the stuff, so at least the NASDAQ anyway. But it still looks bearish to me. The question is how much you're going to get from a rally from here, and then we'll see.
Mm-hmm. I look at this way. It may turn around today and just go the other way. I've seen it. They'll go up in the morning, and then toward the close, they'll give it up.
I know very little about this stock other than it's located in Connecticut, and it's very tightly held. That's all I know. What else can I help you with, my friend?
Here's a situation. I've been shorting it for a while now. And on the previous high, I shorted. Mm-hmm. And then when it got to the 200-day, which was about 1,100.
Wow.
I had a choice, either cover and says, well, maybe it'll break lower. So I was waiting those 2 days. Mm-hmm. And then I got the idea, well, maybe it looks like it's going to go lower. So I shorted that number, about, call it 1,100. Mm-hmm. Turn around, and I didn't get a chance to catch it because they just jumped right up to like 1160 within the next day. Mm-hmm. And I'm like, made a boo-boo. So I just sat through it and got up to where just now it went up to 1280, 1290 roughly. Mm-hmm. And then I started shorting again. and I've been talking to you about it. The question is, when we get down to about 1100, when and if it does, do I cover those shorts or do I leave them there? Or what would you do when? That's the hard question. I know that.
That's a hard question.
Yeah,
you got it. Yes. Oh, yes. It's not only a hard question; it's a hard answer. The problem that you have here is you're not just doing technical things. You're violating some really strong money management principles that I follow very closely. One is never ever add to a losing position. I could understand adding down there at 1100 when it didn't break right away, but you've got to focus on how much you're at risk at one time, not how much you're going to make. The answer to your question, and I'm not sure this will happen, but if it does get, I know that, I understand that, and you added some more, correct?
Right, that's exactly right.
No, nothing wrong with that either, but when you did that, you say, how much do I have to risk on the rest of my units? Because now you exposed yourself to a $200 a share rally in that. You didn't feel very good during the time in March, did you, or May?
No,
of course not. You feel like something on the bottom of your shoe. Now, you asked the other question is, what do I do if it ever gets down to 1100 again? I would stay short. Because if you took that $200 a share pain from 1100 to 1200, almost 1300, then my friend, you're playing with big bucks. However, if it gets above 1300, you better be really careful because you could lose a whole lot of money. You know, so that's what I'm saying. You know, today we're having a pretty good, counter trend rally here because of the fact that we've been down for so long, but 8 days in a row, which is very unusual. So we'll see if we get a rally from here. But be really careful, my friend. You get above 1280, you got a problem.
1280, okay. Because I looked at it this way, around the 200-day, and that was the 200-day at that time, it was 1100, but the 200-day has been climbing now to about 1160. So now you can't short when you get to the 1160, you have to wait till it gets lower. It breaks the 200. I always like to short below the 200-day, but this time it got away from me. And you're right, I didn't have proper management. I should have put a stop even at, okay, you got caught 1160, make it 1175 and get out. That should have been the right thing to do.
Just make sure you protect yourself because there's always another train coming by with lots of chances. So the trains are going back and forth, north and south, east and west. So if you protect yourself, you're going to catch some of these. There's no question about it.
That's the emotional part. Sometimes as it's heading down, and you hit it right on the head because you think you're going to miss the train, and you jump on it, and then you find you didn't. It goes the other way,
Yeah,
so
that's what they call trading, my friend.
Trading, yes.
Yes.
Thank you for your help.
Protect yourself, my friend. Okay, I really don't want to see. I watch the stock every once in a while, just because you've called in so many times, and just be careful. Don't let it get above 1280. That would be a very bad sign, in my opinion.
Okay, I'll watch it that way.
Okay, don't just watch it. Do something. If it's something happens, protect yourself.
Right.
Because there's always something. Maybe you could get it up. Maybe you could sell it at 1440 again. You never know.
Mm-hmm. Well, you know what? I just placed some recent shorts. As it goes up, I immediately cover and take a little bit of profit on them and make them sure that when it gets down to the 1280, I'm pretty much going to be out of it.
Okay. Well, let's see how you go. Call in again when you get a chance, and we'll see what happens.
Will do. Thanks for the help.
Thanks for calling in, Charles.
Mm-hmm.
Okay, you bet. Thank you. We got a call from our friend in California. Brent, are you there? Hello? I think we've lost. Yes, hello?
How are you today?
I'm good, Brent. How are you?
Very well, thank you.
What can I help you with, my friend?
I heard you mention a little bit about corn and wheat. I know you'll talk about it more tomorrow.
Yes.
But I did want to go over, I guess, the corn. It's done more than a 786, correct?
Oh, yeah, it's going to make it, I think it's going to make at least a test of that double bottom at $4.40 a bushel in December corn. And right now we've got wheat below the 786 already with the move we've had down today. It's still accelerating to the downside, so I'm assuming it's going to we've got a crop report, I believe, today or tomorrow. and that will, that'll tell us a little bit. But, basically corn is just in the middle of the growing season, so there's not much to tell there, but wheat might have a little information.
And so the fact that wheat has done less than corn has on the downside, do you consider that to be a stronger, as far as, if you had a choice between the two, which one would you pick, I guess what I'm getting at?
You mean which of the ugly stepsisters do you want me to ask for a date? Well, I tell you, what I would do here is, because we're down at these levels that are really, really strong in the whole world, and we're losing open interest in these things too, just like we are in other things. I would wait a day or two. This is only Wednesday. I would take a look at it maybe Thursday or Friday, even possibly Monday. It's not going to take off and start going up the limit every day. Well, I don't think it will, but, I would give it a day or two. You got a really wide-ranging day today in the wheat to the downside. You're below the 786 by about 3 cents. So you either buy it here and put a, 6 or 7 cent stop in it, or you wait a day or two. And my preferences would be to wait a day or two.
Yeah, I want to wait for that report to come out. That obviously makes sense. But I just, if you could only do one, once this all settles out, would you go with the stronger wheat, or it just depends on how they're acting?
Well, I would watch market action is what I would do. That would be the thing that I would watch the most. And we're looking at tomorrow. Well, tomorrow at the commodity show, maybe we'll have we'll go down to a half-hour chart or something. Maybe we'll have a low-risk entry. And we'll see. I was just informed that the crop report came out today, and that's why the weakness came in. So we're having a capitulation because of the crop report. So we'll watch tomorrow on the downside to see see how far they go. Then we'll look at them tomorrow. That's the best. Let's wait a day. You don't want to look. You've only got 2 hours to trade those things legitimately. So I would wait till tomorrow. We'll look at them tomorrow during the commodity show. How's that?
Makes sense to me.
Yeah, that way you can control your risk better than now.
Okay.
I'm sorry. Yeah.
Go ahead, Mark.
No, I was traveling, so I didn't know exactly. I know it always comes out the 11th or 12th, the crop report, and I didn't get home till really late last night from my trip, and so I didn't know. And I called Rich like I do every day, and he was in Chicago, so I didn't connect with him. And so I wasn't aware when the report came out. And I was doing so many other things, I didn't go to the website of the Merck to see when the actual report was. So it's out now. It's bearish, which, it's been going down. Why wouldn't it be bearish? To realize that corn's been down 5 weeks I only had 2-day rallies during that whole time, that's an oversold market.
Oh, exactly. They both look like there's something worth at least taking a look at on the long side. So.
Yeah. Well, we'll look at it tomorrow during the commodity show. How's that?
Sounds good. I was going to ask you quickly. I know you made some mention back, in the past about off a stock subject, but bass fishing in Arizona, is the fishing pretty good there?
I have friends that do it, and there's very good fishing. People don't realize how many boats are registered here in Arizona. In the middle of the desert here, we got some mountains with some wonderful lakes, and there is some very good fishing in here, but not like it is in the Midwest and in Florida and places like that. But they have some nice fish, not as good as other places, but they enjoy it. So, I go to Red Lobster when I'm in a mood to fish.
Yeah, it gets plenty warm there, so I would think it'd be a pretty good environment for them.
But it's a dry heat.
Yes, that's true.
as opposed to Florida, that is a little bit more humid. But I love Florida. It's a wonderful state, and I actually enjoyed it very, very much. So we'll see. Okay.
All right, take care, Larry.
Right, yeah, we'll watch. Give me a call tomorrow, and we'll take a look at the wheat and the corn. Maybe we'll find a low-risk buying opportunity here after the report, and we'll check the open interest to see what happened, because if we get a big drop in open interest with this market coming down like this, it's really poised for a really strong rally to the upside would be my guess.
Sure looks like it. All right, thank you very much, though. You take care.
You bet. Thanks for calling in, Brent. I certainly appreciate it. Okay, I also posted into Tiger TV the chart of the notes, the 10-year notes. And, folks, I'll tell you, when I was going over my stuff this weekend on what was going on, I read a statement on the internet that I double checked. Did you realize that the country of Ireland borrows money cheaper than the U.S. government? Can you explain to me how that is? I mean, they were almost in receivership in 08 or 09 or 10, whatever it was. They were one of the pigs, P-I-G-S, Portugal, Italy, Greece, and Spain, and Ireland. I mean, it was just really amazing. So I don't know. I think that there's something wrong here. I think the Fed is playing a card game that they have all the chips, but someone's going to come into that game that is going to upset the apple cart. That's what I think it is. I think it's going to be counterparty risk, and I think the Fed is going to get their hand slapped. They've been in business for 100 years this time. This is the third time we've had a U.S. bank, and it was formed on Christmas Eve of 1913, so we're a little over 100 years old in this puppy, and we'll see what happens. You just can't keep pumping money into this. You stop and think $2 trillion maybe $4 trillion over the past few years, and if you took every man, woman, and child, divided 360 million, divided into that, we could have all got a $10,000 check, and I think we'd be far better off than just giving the money to the banks. That's literally what I see when I see something like that. I don't know if I'm right or not. Hey, believe me, this stuff that you hear on this radio show, at least on my shows, have a tremendous caveat emptor: buyer beware. Because a lot of things I say, I think they're the truth, but I read them on the internet, and if I don't double check them, I find out 2 or 3 days later that no, that didn't really happen, and that's not really the thing to do. I feel very strongly about these patterns that I'm talking about here. That much I don't doubt that at all. I've been doing this for 55 years, and I've seen everything that a person can possibly see during that time. And these patterns are not any different. It's not different this time. The outcome might be a little different this time, but nothing's different right now. I don't know about the high-frequency trading, but I don't know if anybody else does either. But that's what we're looking at. This is an environment that we work with, and we'll see what happens. That's all we can really say. So we got the Dow still up about 80 points on the day, hanging in there pretty good. And the NASDAQ has got back to positive territory. So it's not the end of the world yet. We haven't even had a correction. The S&P has only come down 15 points from its high. The good thing is we're starting to see volatility move up a little bit. And when we get back from this next break, I certainly want to cover that volatility index, because it's been a major surprise to me, because I thought that it would be, just literally going into an abyss, because nobody, thinks that it has a chance. I mean, it's not going up, but it's certainly not going down, and that's could be a precursor of maybe some type of relief sell-off. And in bull markets, folks, they go up a little bit at a time and back off, a little bit at a time and back off. This thing has been going up it's so many days above the 200-day moving average. I don't even think that they have records going back that far. It's been a very, very long move to the downside. So we'll just watch it here. We've got to take a break here with the Dow up 80-some points.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I'm going to end this show with one of the big stocks in the financial arena, one that everybody looks at, and it is American Express. It's not a very fun company to work for. I happen to have two friends that had their careers there. One is ending one right now. The other one was ended it about 3 years ago. After filling their coffers for many years, they certainly didn't treat him very well. But that's just neither here nor there. But what we're looking at here is since last November, going back the last 7 months, we're completing two major AB equals CD patterns. This is the Thunderbolt pattern that we look at when we trade the Gartleys and the butterflies and all the other things. This is on page 249 in Gartley's book. It was the best pattern that he talked about, because this is how markets go up. They go up and down, and we're completing two major ABCD patterns up here at the 95 level in American Express. It's trading at 94.99 right now. So my guess is this is the time to either put a short on here with a stop at about 97.5, risking about $2.50, or maybe buying a July put, just say a July 94 put, something like that. And but this has got everything that you could possibly ask for as far as a trade. I mean, if you believe it, this market has gone up since May 19th. It's had a 2-day correction during the Memorial Day holiday. Other than that, it has been straight up. It has, and the correction that it had was only 1 point. And coming in at $90 a share means it's basically uninterrupted for a solid month. And that puts it into the outlier event, just like it did in February. If you look at the low we made on February 4th in American Express to the high that it went up to in March the 3rd, another month, and then it went from 94 to 83. So that's what you're looking for. You're looking for possibly 10 points down with about a 2.5-point risk. That's a 4-to-1 risk-reward ratio with a probability better than 7 out of 10. So that's what I'm looking at when I'm watching this, but it looks got all the things that you could possibly ask for. If you look at the long-term weekly in American Express, it's been a monster. This stock got down to $11 a share back in March of 2009. It's 9 times that price right now. And that's a huge move. You remember that March of 2009, folks? That was nothing like what happened in 1987. I mean nothing. That was a non-event when we were talking about banks too big to fail instead. That was a non-event like 1987. Nobody knew what to do. And I think they're going to get into a situation where they don't know what to do again because they pumped all this money in. And if somebody doesn't come to their help, they're going to be in a real serious quandary. I think the Fed will be into. Something's wrong with this market, folks. When Ireland can borrow money cheaper than we can, Spain is very close, but Ireland can already borrow money cheaper than the U.S. Something's wrong. Something's very wrong when you see that somebody's not thinking through this. Well, maybe it's the Italian that's speaking. I don't know. All I know is that shouldn't be happening, and it is. So nothing else you can do about it. Tomorrow on the show, we're going to go over the situation that we have in corn because it keeps dropping, wheat keeps dropping, and we got a situation here where we might have some deflation going on in these grains, and that will really be difficult. So tomorrow we'll be on at the commodity hour. We got the Dow is still rallying pretty strongly here, up 80 points, and NASDAQ has come back to rally back a little bit. So we'll see what happens. So live every day in an attitude of gratitude, folks, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.